Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. This is part 1 of Inflation Hedging Strategies for 2024, Smart Investments to Protect Your Wealth. Inflation is a silent wealth killer. When prices rise, every dollar you've saved buys a bit less. It's subtle, but over time, the impact on your purchasing power can be huge. So, how do you protect your hard-earned money from this inevitable reality? The answer lies in smart investment strategies. In this video, we'll explore different ways to safeguard your assets against inflation. Whether you're new to investing or looking to refine your portfolio, you'll find valuable insights here. From real estate to commodities, these strategies aim to keep your wealth intact in a changing economic landscape. Understanding inflation. Inflation is more than just a buzzword you hear on the news. It's a key factor that can affect your financial future. By understanding inflation, you can make better choices to protect your wealth. What is inflation? Inflation is the rate at which the general level of prices for goods and services rises. When inflation goes up, the purchasing power of your money goes down. Think of it like this: if you had $100 last year, it might not be enough to buy the same amount of groceries this year. Inflation eats away at the value of your money, making everything more expensive over time. Causes of inflation. There are several reasons why inflation happens. Here are the main ones. Demand pull inflation. This occurs when there's more demand for products and services than the economy can supply. Think of it like too many people chasing too few goods. Cost push inflation. This happens when the cost to produce goods and services goes up. Higher costs for raw materials, labor, or other inputs can push overall prices higher. Built-in inflation. Sometimes, inflation is built into the economy. Workers expect higher wages each year, and companies raise prices to cover these costs, creating a cycle of rising prices. Effects of inflation on the economy. Inflation can have both positive and negative effects on the economy. Here are some key points to consider. Consumer spending. When people expect prices to go up, they might spend more now, boosting economic growth. But if prices rise too quickly, people may cut back on spending, which can hurt the economy. Savings. Inflation can reduce the value of money saved in banks, making it harder for people to save for the future. Interest rates. Central banks often raise interest rates to control inflation. Higher rates can make borrowing more expensive, slowing down economic growth. How inflation affects your purchasing power. Inflation directly impacts what you can buy with your money. Here's how. Eroding savings. If your savings don't grow at the same rate as inflation, you lose purchasing power. Money set aside for retirement or other goals might not go as far as you had planned. Wages versus living costs. If wages don't keep up with inflation, your ability to afford everyday items like groceries, gas, and housing diminishes. Debt. While inflation can decrease the real value of fixed-rate debt, it can make variable-rate loans more expensive. Understanding inflation is the first step in protecting your wealth. By knowing what causes it and how it impacts the economy and your personal finances, you can make smarter investment choices. Stay tuned for more strategies on how to hedge against inflation in our next sections. Importance of inflation hedging. Inflation can have a sneaky way of reducing your wealth over time. It's not just about higher prices today, it's about the long-term effects on your savings and investments. Here's why it's crucial to consider inflation hedging as part of your financial strategy. Protecting purchasing power. When prices rise, the value of your money falls. It's like trying to fill a bucket with a hole at the bottom. You need more money to buy the same things you could have bought for less last year. By hedging against inflation, you safeguard your purchasing power, ensuring you can maintain your lifestyle even as prices climb. Securing your savings. Imagine you've been saving for years, maybe for a house, a car, or your child's education. If your savings don't grow at the same pace as inflation, the real value of your money diminishes. Effective inflation hedging strategies can help keep your savings intact and aligned with rising costs, so your future goals remain achievable. Enhancing investment returns. Inflation can erode the real returns on your investments. Even if your portfolio is growing, if it's not keeping up with inflation, you're effectively losing money. Incorporating inflation-resistant assets like real estate, stocks, and commodities can help boost your returns and provide a buffer against inflationary pressures. Diversifying risk. Relying solely on traditional investments like bonds or savings accounts can be risky when inflation spikes. These investments typically offer lower returns and can lose value in real terms. Diversifying with assets that perform well during inflationary periods broadens your financial safety net. This diversification minimizes risk and ensures you're better prepared for economic changes. Ensuring stable income. For retirees or those relying on fixed incomes, inflation can be particularly damaging. If your income doesn't rise with inflation, your ability to afford everyday expenses takes a hit. Investing in income-generating assets that adjust with inflation can provide a more stable and predictable income stream. Hedging against uncertainty. The future is uncertain, and inflation rates can be unpredictable. By integrating inflation hedging strategies into your financial plan, you prepare for various economic scenarios. This proactive approach offers peace of mind, knowing your wealth is protected regardless of what happens in the economy. Long-term financial health. Thinking long-term is essential when it comes to managing your wealth. Inflation may not seem like a big deal year to year, but over decades, its impact can be profound. A solid inflation hedging strategy ensures that your financial health remains robust, protecting not only your current lifestyle but also your long-term financial goals. Ignoring inflation is like ignoring a slow leak in your roof. It might not seem urgent today, but over time, it can cause significant damage. Taking steps to protect your wealth against inflation ensures that you can weather any economic storm and enjoy financial stability for years to come. Traditional inflation hedging strategies. When it comes to protecting your wealth from inflation, traditional strategies offer tried and true methods. These approaches have stood the test of time and provide reliable options for safeguarding your assets. Investing in precious metals. Gold and silver are classic choices for hedging against inflation. These metals have been seen as safe haven assets for centuries. Why? Because they tend to retain or even increase their value when the cost of living rises. Gold. Often considered a store of value, gold doesn't corrode or tarnish. It's universally recognized and can be easily traded. Historically, when inflation rises, gold prices tend to go up too. This makes it a reliable way to preserve your purchasing power. Silver. While it's sometimes overshadowed by gold, silver also offers stability during inflationary periods. It's more affordable, making it an accessible option for many investors. Plus, silver is used in various industries, from electronics to solar panels, adding to its value. Precious metals might not provide regular income like stocks or bonds, but their ability to hold value makes them an important part of a diversified portfolio. Real estate investments. Real estate is another strong defense against inflation. Property values generally appreciate over time, and the income generated from renting can also rise with inflation. Appreciation. Over the long term, real estate tends to increase in value. In many markets, property prices grow at a rate that outpaces inflation. This means that your real estate investment could be worth significantly more in the future. Rental income. As inflation drives up the cost of living, rents typically follow suit. This results in higher rental income, which can help to offset the rising costs of living. For landlords, this is a powerful way to ensure a steady cash flow that keeps pace with inflation. Furthermore, owning property provides tangible value that isn't as susceptible to market volatility. Whether it's a single-family home, an apartment complex, or commercial property, real estate investments offer both growth and income potential, making them a solid hedge against inflation. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.